Welcome to the People's Podcast, an employer's resource by Group Management Services. I'm your host, Alyse Kimble.
This podcast does not constitute legal or financial advice. Its accuracy, completeness, or adequacy is not guaranteed. Use the information at your own risk. Consult an attorney or financial advisor before taking any action.
Hello, and welcome back to the People's Podcast here at GMS. My name is Alyse Kimble, Training Development Manager, and I'm sitting here with Claire McCarus, the Benefits Sales Manager here at GMS. We're going to be talking about all things benefits today. Let's go ahead and start off with talking and speaking to business owners who might not be offering benefits currently. So what are some things that you would really like those business owners to kind of understand about the benefits of offering benefits to their employees?
Sure. One of the huge benefits to offering benefits to your employees is really a recruitment tool. There are a lot of employees who may leave small businesses for 50 cents more an hour, $1 more an hour, and benefits is something that can retain those employees as well. So finding good talent and keeping good talent, and benefits is a major way to obtain that.
Absolutely. I feel like with the competitive market right now with talent, any way that you can differentiate yourself or offer something that's maybe a little bit more kind of competitive, I guess, than what's out in the market, I think is always going to be a good thing for attracting and retaining talent.
Yeah, absolutely.
Wonderful. And then we're going to kind of shift to business owners that are currently offering benefits, some conversation there. What are their options when it comes to the market? I know you're going to talk a little bit about fully funded and level funded plans, but what are some of the things that they have options for when it comes to benefits?
Yeah, so there's two main types of medical insurance, fully funded and level funded. Fully funded is the most common type of insurance that's out there. This is priced according to age, gender, smoker status, and zip code. It looks at those demographics and determines a price. And then in this scenario, you are given your rates without any idea of how your group is performing. You take the renewal. Your renewal is based on a combination of usage and how the geographic location around you is performing as well. So you are responsible for your own renewal, but you're also not, which can be a little bit complicated. This type of insurance could be really good for people that are heavy users on a plan, maybe are not the healthiest group of individuals. And then there is level funding or self-funded options. These are based on the health of the group. So these typically require medical questionnaires to determine how healthy the group is. They base the pricing on expected usage. The risk involved in this is your little group of 10, 20, 50 directly impact your group of 10, 20, or 50. So it can be a little bit more risky in terms of renewals. They could be a little bit more volatile. This model also allows you to get a lot more transparency, so you can see how the plan is performing. You'll have a very educated idea of how your renewal is going to be when it comes down to renewal time.
Gotcha. Okay. So I hear a lot of the pros and cons of each plan. What do you see most small business owners taking?
Because 95% of their options are fully funded, they're mostly taking the fully funded option. Traditionally, level funding was not an option until you were a larger size, but now it's more common for groups of 5, 10. Again, the biggest risk is those renewals.
Gotcha. Okay. What should a small business or medium-sized business even be looking for when it comes to a health insurance partner? What are some of the things they need to be asking or looking for?
Yeah, I find a lot of options are out there that are not true medical insurance. So I've seen business owners with indemnity style plans. Those are plans that you pay up front and then the plan reimburses you.
Okay.
It provides no discounting, no deductible, no maximum out of pocket. So although it's paying me a portion back, I could be doing this for unlimited dollars, right? So you want to make sure if you are taking a plan that has multiple contracts, you most likely are on an indemnity policy. Because it's not true medical insurance, it's also a lot less expensive.
Okay.
I've had a business owner who paid $5,000 for a mammogram, and on traditional medical insurance, it would have been covered under wellness.
Wow.
Mhm.
Okay. Yeah.
Another thing that's really popular now is cost sharing programs. These can be Christian-based cost sharing, and now it's become more common that it's just general cost sharing. The risk to those, they're very inexpensive, but they have the right to not cover things. So if you were diagnosed with cancer, traditionally, your first year you have to pay 100% of the costs. Year 2, they'll pay 25%, and then you work your way down to 100% paid. Diabetes is also something that they may not pay for if you have type 2 coming onto the plan. So you just want to be really careful of your options and if it best fits your needs, or if we're looking for that guaranteed negotiated price, that guaranteed maximum out of pocket.
Gotcha. So I know that you mentioned a couple things there. What are some, and we'll get into trends a little bit later on in our conversation, but I wanted to just touch on what are some of the things that you're seeing that are just out of control when it comes to like a lot of people on the plan having this maybe pre-existing condition or something like that. We're seeing a lot more people who have diabetes now. Then we're seeing, we used to see like heart attacks or like heart problems were like a really big, thing for, business owners to have to like worry about prices going up. But now it's like diabetes has become like a really big epidemic here in the United States.
Yeah.
We can talk about that later with trends though.
So that sparked an idea for a response. So yeah, we are seeing a lot more diabetes, type 2 diabetes. We are seeing a lot more usage of higher cost prescriptions such as Ozempic, Trulicity, to treat that condition.
Yeah.
We're also seeing a lot of ulcerative colitis, digestive problems as well.
Really?
And those can be very high cost on a health insurance plan.
Gotcha. Some things to look out for.
Mm-hmm.
Absolutely. What are some good questions that a business owner would need to be asking a broker or a carrier to ensure that they're really making the most out of their coverage that they are getting?
Sure. The biggest thing is there's more to a plan other than the deductible. So a lot of times we focus on our deductible, but you need to look into other aspects of the plan as well, such as co-payments. That's what you're going to be paying initially when you do have those doctor's visits and you are paying for those prescriptions. And the big thing I think is most ignored is maximum out of pocket. This is your worst case scenario. So should you be in a terrible accident, get very, very ill, this is the most that you would be paying in the calendar year. They can range anywhere. I mean, they can be very low, and the maximums are around, I believe, $9,000 or $10,000.
Gotcha. Okay. Good things to ask for sure. Are you seeing a demand more for a traditional plan or maybe something more like an HSA?
I see it's almost a 50-50 split. I see that business owners in certain geographic locations gravitate toward traditional style plans. So more northern, like New Jersey, New York, California appreciates a traditional style plan.
That's surprising to me.
Yes. So they like the low co-pays.
Makes sense.
Like the low deductibles and low max out-of-pocket amounts.
Okay.
But then on the flip side, health savings account plans are a lot less expensive, and it is becoming very popular compared to where they were when they first came out around the 80s.
Gotcha. Are you seeing a younger demographic kind of gravitate to an HSA plan? Because it's pre-tax money. I would assume that this would be something that money they could put away for medical emergencies in the future when they're going to be older and they actually need to use that money. So
yeah, it works best with someone who's relatively healthy.
Yeah.
I'm going for my well visits, maybe a couple of urgent care visits, or I want this more as a catastrophic plan. I know my worst case scenario, and it's going to cost me much less than if I didn't have insurance.
Yeah.
So traditionally, yes, younger populations do gravitate toward the HSAs, but also we have kind of the opposite. So we have the young ones, and then we have maybe the older crowd who really understand the importance of the pre-tax contributions.
Yes, absolutely. And then, are you seeing a lot of business owners offer multiple plan options or just really just want, what are you thinking?
So this is determined a lot of times by the carrier,
Okay.
how many plans they are allowed to offer based off of how many employees are enrolled in the plan. So a lot of times they don't get the option to offer more than one if they are traditionally on the smaller side. I would say less than 30 enrolled. We allow plans, the option to offer 2 plans once the company has 8 employees enrolled.
Wow. Okay.
Mhm.
And I feel like that's a great transition over
Mhm.
to the fact that I want to talk a little bit about how GMS really is very different than what's out there in the open market, even from
Yeah.
our PO friends right out there. So some of the competition that we have in that market, how are we different? What are some things that we're doing that maybe they are not?
Yeah, so our solution is exclusive to us. We combine the advantages that I mentioned earlier about being level funded with the security of being fully funded.
Okay.
So, what I mean by that is we price based off of usage, which a lot of times is an advantage. A lot of times we're being overpriced just due to our demographics and where we live. Basing it off of usage is traditionally a savings. We provide a lot more transparency so that our clients know what to expect for their renewal, how that plan is being utilized.
Let me pause you there because I know you have more to say. But what kind of support are they typically getting from their current carrier
If
or
they
broker?
fully funded plans get nothing until they have 100 employees enrolled or more.
Really?
So
Okay.
they will have no idea how their plan is being utilized.
Wow. Okay. I can see how that would be frustrating, especially
Yeah.
at renewal if you got a big increase. Okay, I'll let you kind of continue a little bit about GMS.
Yeah. So again, we take the pros of being level funded, but the security of being fully funded.
Okay.
So what I mean by that is we have a pool of about 25,000 people on our plan. So when it does come to those renewals, there's a lot of security
Okay.
to keep our renewals a lot more stable, less volatile.
Makes sense.
Mhm.
Bigger group, you have more stability there.
Yeah, absolutely.
That's great. So I want to talk a little bit because I know we're getting close to time here, but I want to talk a little bit about some healthcare trends that
Sure.
some small business owners need to keep in mind as, they're kind of navigating the space because benefits can be confusing at times.
Yeah.
I know we have a full benefits department and division here, and that's kind of what you guys do day in, day out. But for the rest of us, we're kind of clueless. So help us kind of understand some of the healthcare market out there. What are some things that you're seeing?
We are seeing higher premiums than we have in years past. A lot of that's due to inflation, which
Yeah.
we're seeing across the board in everything.
Yes.
Another big driver to the costs increasing so much is COVID.
Really?
The biggest thing is people were not getting preventative care or checking on their conditions for a year or two. So then when it was caught more advanced, which means more costly to treat.
That makes sense.
Mm-hmm.
Yeah. Oh, wow. So you're still seeing stuff coming from 2020.
Yeah, it's really impacting some of the pricing.
Yeah, absolutely. I can see that for sure. I've heard this trend recently. Many insurance providers are leaving small group markets. How is that really affecting small businesses?
It's giving them less options to choose from.
Yeah.
And we know with less competition, that means they can price slightly higher, a little bit more demand. So we are seeing, again, I think that relates to why the cost of medical insurance is rising.
Yeah, absolutely. I think so too. And also, do you kind of know why some of these big players are leaving the small, medium-sized business private market?
A lot of times it's because the small ones are not as profitable as the larger ones.
Yeah.
So a lot of times they like to focus on larger employers.
That makes sense for sure. I know you mentioned that renewals are looking to increase about 5% next year, which, oh my goodness, I feel like every year we're seeing an increase when it comes to health insurance cost. What does that really mean for small business owners who might be really feeling that? What options do they have?
The biggest option they typically go to is shopping around, trying to hop from carrier to carrier to carrier. Typically, we see about every 2 or 3 years, employers may be making the switch just to get some relief, but then they're back in the same boat they were a couple years later.
Yeah. What would you advise to those small business owners?
I always think it's great to do your due diligence to shop around. The style of plan with the fully funded market, unfortunately, that's just the name of the game. They will have to shop and change every few years. If they're not doing that, they're doing themselves an injustice because now they're paying so much more than if they would look at their options. I think we are a fantastic solution. Again, we provide a lot more stable renewals than if they were by themselves. The way our model works, it works best for companies to stay with us and stick with us for long term rather than be with us for short term and then leave.
So I know a big kind of pain point for a lot of business owners when we talk to them is benefits administration. Because it's such a monster, right? Especially for like your larger groups. So how can GMS really help once a client comes on board and they do take our benefits? How can we really help them with that administration piece?
Yeah, so we have a dedicated team to help all of our clients. We can help answer any employee questions. Employees can call us directly. So what's a deductible? How do I get my ID card? I just had a child. How do I add them to my plan? We handle all of that. We handle all COBRA administration. So when the employee does leave the company, we handle the follow-up and gathering the premiums if they did want to continue that coverage. We have a customer service team and an in-house claims team as well. So really, we break down traditional medical insurance and a traditional broker role into several different pieces so that nothing slips through the cracks.
Awesome. I know we didn't touch on this previously, but I do want to talk a little bit more about it. So if a company's not able to offer maybe full benefits yet, what are their options?
Yeah, another great option, and this again helps the recruitment and retainment of employees, are ancillary benefits.
Okay.
By those, I mean dental, vision, life insurance, disability. There are a ton of options out there that are significantly less expensive than medical insurance.
Gotcha. Now, does GMS offer ancillary?
We do. So we have a combination of employer paid options or 100% employee paid options. I like that one. We call them voluntary benefits because the employer has no financial contribution, but now we can say we offer all of these different things, which helps them to hire good talent.
That's awesome. What are some of the most popular ones that we see a lot of employees take here at GMS?
Yeah, some of our most popular are supplemental life insurance policies. Dental and vision are also really large. And individual disability insurance. Usually when carriers offer disability insurance, they have participation requirements. So many employees need to sign up for the policy to actually go live. We don't have that. So one employee could sign up for disability and they would receive that disability.
That's excellent. And it's nice to know that, as an employer, you kind of almost can offer benefits light to your employees with a very small cost.
Yes.
So really great option if that's maybe what you're not able to do now, but maybe able to do in the future.
Sure.
So thank you so much for joining us, everyone, for our People's Podcast here at GMS. Thank you to Claire McCarus. This was so enlightening when it comes to benefits. I hope small business owners, you took something away that you can use when you are looking at benefits in the future. And if you need anything from GMS, we're always here. Please reach out. Hope you join us for our next one.
Thank you for tuning into the People's Podcast. We hope you found today's discussion helpful. Stay tuned for more insights in our next episode. For more expert guidance and resources on small business management, PEOs, and more, give our podcast a follow. Find us on social media or visit us at groupmanagement.com. That's groupmgmt.com. We're dedicated to helping small businesses everywhere make their operations simpler, safer, and stronger.